In this talk, I will cover how you can take a deduction for the business use of your vehicle. There are two methods for calculating a deduction related to your car or truck expenses. Both methods are based on the amount of miles that you drove for business purposes throughout the year. In order to know the amount of miles driven for business and for personal purposes or other reasons, the IRS requires that you maintain a mileage log as support for the numbers you provide. The two methods used to calculate the deduction are the actual expense method and the standard mileage rate method. The standard mileage rate method is the simpler of the two because it allows for far less record keeping. The deduction is calculated by taking the total business miles driven times the standard mileage rate, which is 56 cents for 2014. So if you had 2,000 business miles, the deduction is 2,000 times the 56 cents, $1,120. Pretty easy. On the other hand, like it sounds, the actual expense method calculates all of your actual vehicle expenses, including things like gas, oil, repairs, maintenance, insurance, depreciation, or lease payments. If you own your vehicle, this is a capital expense and must be depreciated according to the depreciation rules. If you lease a vehicle, you can include your lease payments for the deduction. However, for both depreciation and lease payments, there may be limitations to prevent luxury vehicle costs from being deducted. For depreciation, the total amounts are capped, and for leasing, there is an inclusion amount that may need to be calculated. You can refer to publication 463 for more information. If you used your vehicle less than 100% for business purposes, then only the business use percentage can be deducted. To calculate the business use percentage, take the total miles driven divided by the total of all business and personal use miles driven. There is a special rule that allows investment-related use to be included with the business use only for the purpose of calculating the business use percentage. With either method, parking and toll costs can be deducted in full. Note that once you've chosen to use the actual expense method and you've deducted depreciation expense for your vehicle, the actual expense method must be used for the rest of the time you take a vehicle expense deduction with that vehicle. While the IRS never allows for the use of estimates, they do allow what is called sampling for calculating your business miles. So if your business driving remains consistent, and that is documented through invoices and other record-keeping activity, then you can use a period of time of records and extrapolate them for the total time. The IRS provides an example of keeping track of the first week in every month of your miles and then using the total miles from that week to extrapolate for every week in the month. Personally, I would recommend getting into the habit of maintaining your mileage log, as it can be difficult to only maintain the records when you need it and easier to develop a consistent habit. A mileage log should include the date, speedometer readings, total distance of trips, and business purpose for all the miles you drive.